You're listening to News Talk Sauga 960. Also streaming live on sauga960am.ca. You're listening to the Marc Patrone radio program. If you'd like to call, here's the number, 416-640-0200. That's 416-640-0200. The Marc Patrone radio program, heard exclusively on News Talk, Sauga 960.
And we are back with more News Talk. Marc Patrone with you. So very glad you could join us on this midweek edition of the show. And markets south of the border down, the Dow, not as down as it was. At one point, it had fallen over 500 points, like something like 560 points to start the trading day. It's since bounced back a little bit, down 380. That's about 1.5%, 1.5% down on the Dow. NASDAQ down about 0.73%. So a little bit of a rebound in stocks. But the other story, of course, is in the area of precious metals, specifically gold, which at this moment is trading at $1,512.50 an ounce. Silver is at $17 right on the nose, up 3.33% just today. So precious metals just going parabolic. And who better to talk about that than Jeremy Wiseman with Guildhall Wealth Management, and he's on the line now. Jeremy, welcome to the show.
Thanks, Mark. Great to be here.
Well, you must have a little bit of a smile on your face. I mean, you've been an advocate. You're in the market of dealing with physical gold and providing your clients with access to a safe way of holding the actual metal, not paper gold, not futures market gold, not COMEX gold, but the real stuff, the stuff that you can hold. And so here we're seeing gold yesterday and today just skyrocketing, and the sky appears to be the limit.
Yeah, we're really happy for all our clients today, for sure. But this was expected. I mean, we saw what was going on with the Fed. They dropped a quarter point, and and then we've got the tariffs that Trump's put on, and the markets are spooked. So now anything the Fed does from here is going to be expected by the market. So now they need a bazooka, and that's just going to be even worse for the markets. So, there may be a dead cat bounce here at some point, but, this isn't looking good for people are running to debt right now. Yields are going more and more negative. So where do you hide?
Exactly.
Right? Are you gonna get a negative yield, or would you rather pay 1% to own physical precious metals that are doing much, much better than negative returns?
Yeah, absolutely. If you're talking to Germany in particular, one of the German 10-year yield now is like minus 5.8%. So for the privilege of being able to hide your money in a bond, you get less money back. I mean, not much of an investment.
I've been thinking about this and listening to them talk on the mainstream financial media, and they're saying negative interest rates is a product of demographics. That older people don't want to take risk; they're willing to take negative yields, and that's sort of, in my opinion, a half-truth. The reason they're having to do that is because central banks around the world have been at zero interest for a decade, and there's been zero capital formation. So now what choices do they have? What choices do retired people have?
Yeah, exactly.
Right?
Yeah.
So they go into negative yield, and this isn't good for pension plans, unfunded liabilities. Negative interest is not a good thing. And so I think, and I just saw an article out today, I think the Fed's going to do another round of QE at some point. The question is will that have any effect?
Which is money. So yeah, exactly.
I think people are moving to gold for these reasons.
Yeah, when you're talking about QE, of course, for those who don't know, it's quantitative easing, which essentially is money printing, although it's digital money printing. It's just adding liquidity to the markets. It's just pumping more cash into the system in order to try and maybe reinflate some of these asset bubbles that we're seeing, certainly in the equity markets, getting slaughtered at the moment. I mean, we had a little bit of a bounce yesterday over 300 points, but today we're back down again. It was interesting. Goldman Sachs yesterday, this might be one of the things that has triggered even more gold buying and silver buying is Goldman Sachs coming out and saying, well, we're expecting 3 more rate cuts. So between now and the end of the year. Well, as rates are cut, I mean, that's bearish on the greenback and the currency, of course. When you raise rates, I mean, just in terms of economic, conventional wisdom, raising rates it tends to be bullish for your currency. Lowering them tends to be bearish. So people bailing out of the dollar and moving it into precious metals.
True, and I like that you said conventional wisdom, because in the past we've seen the exact opposite occur. They lower interest rates, or they pump money into the system. This should be bad for the U.S. dollar, but I guess they're buying U.S. treasuries with it, so it's pushing the dollar up, right? The demand for it up. So it's an interesting time. I think that previous tools, quote unquote, aren't necessarily going to fix it this time. We are in the midst of an out-and-out currency war now. China dropped its currency to battle against the tariffs, and a strong dollar is not necessarily good for the States. There's a delicate balance there that has to be made. But again, there's a lot of volatility in the market. People are looking for a place where they can hide. And gold has been one of the most undervalued assets out there, and I think now it's getting its turn to shine.
And when you look at how quickly it went from 1,400 to 1,500, assuming it holds this level, it's quite possible that it may dip again. But I mean, it took no time at all to get from $1,400 to $1,500. It just seemed to happen in a matter of a week or two.
It's been really quick, and that could partially be a short squeeze on the paper side. So in the paper market, there's a lot of paper promises and not a lot of physical gold. So if you're going short in this market and the market's going against you, you can think back to when oil went to $140 a barrel. That was a short squeeze. That was, people betting that the price of oil would go down, and it went the other way. So that could be part of this. But I think the fundamentals in the market are still very much at play.
One of the things that we've seen in the past, Jeremy, and I know you've watched the markets carefully for years, is the manipulation of the paper gold market that we don't seem to be seeing as much of now, or maybe they've given up even trying, because I distinctly remember there was an effort maybe 3 weeks ago, I seem to recall, where there was a whole lot of futures buying of a lot of bets on the decline of gold on the paper markets, and it hit them. It hit it a little bit, but it didn't have any sustainable impact. So we've seen in the past efforts to bring down the price of gold, I guess, as a way of maybe helping to add confidence to the paper currency market. But that doesn't seem to be in effect as much anymore. Have the banks or whoever was manipulating the gold prices, has that stopped, do you think?
Well, I think, it's a large topic. In the past, a lot of the industry has said that the reason why they're loading this paper inventory to make it look like there's a lot more gold, therefore the price goes down. One of the reasons they're doing that is to make the U.S. dollar look strong. And again, now there's this delicate balance of, well, we don't want the dollar to look too strong here. We still have to compete. We'd like the dollar to maybe go down from here, so that could have an effect. I think the other aspect of this, manipulation in terms of just this vast array of paper out there acting as if it's physical, is that there does reach a point where people who own the physical won't let go of it. And so you come up with more and more paper to try to push the market, and you're just not getting the same effect. So it's a little bit like the quantitative easing. You can, at some point, more money isn't going to fix it, right? Yeah. So at some point, more paper isn't going to fix it. So you start to see less and less response to that action in the market of adding more and more paper. And that's where we really felt we knew where the bottom in the market was, back at 1080 on gold a few years ago. Mm-hmm. And I think that the paper market is certainly scared today.
Yeah, well, there's a lot of people who are frankly confused between the paper market and the real stuff, which you deal in real gold. But the fact is that when you look at the COMEX and you look at the futures market and derivatives and the rest of it, you're not talking about real gold. And even when you're buying ETFs like GLD, for instance, if you want to invest in what appears to be gold, am I buying gold if I invest in GLD? Well, no. I mean, the truth is that you may not be buying real gold. And so you have to, as a consumer, be educated and understand that there's the paper side of the equation, which is not real physical gold. It's a representation of gold, but it's not real gold. And the actual physical product, of which there is a lot less of than there is of the paper gold.
That's right. And it's counterparty risk. So when you're buying paper, you're buying a partnership with the person who owns that paper. So you're not really owning gold. I liken it to, anyone can take cash out of a bank and put it under the bed because they just simply don't like the bank, or they just like the idea of having the cash under the bed. Yeah. There's still a bit of counterparty there because the government can lower the value of the dollar, which is what we've seen against every fiat currency out there. But if you have physical gold that's yours under the bed, that's it. No one else can touch it. No one has a claim to that. No one can affect it, right? We talked about the paper market. They can try, but they can't really affect it. The market will overcome, right? The market will find value in that, will find a value price for that asset. So the idea is to own your own gold, not to enter into some sort of contractual obligation with someone. And the idea is to be your own central bank and to be out of the financial system. And that's what having a 10%, 15% allocation of precious metals in your portfolio is what you're really doing.
And when you're looking at a comparison with gold in Canadian currency, as I understand it, I've read some reports this morning, Jeremy, that in fact we're hitting or at or near the record price of gold in Canadian dollars, in Australian dollars, in Japanese yen. So
British pound.
That's right. And so, we may be $500 shy of a record in U.S. dollars, but the rest of our currencies, the currency that we use, the Canadians use, we may very well be at a record level.
We are. We've been there for, I think, about a month now. Definitely 6-year highs overall in gold and U.S. dollars. And this is the thing. If the U.S. dollar is getting stronger, that means all other currencies are weaker against it. Right? If you ask any friend of yours, every listener can say, we ask, what's the value of the Canadian dollar? Most people say, oh, well, it's 1.34 against the U.S. dollar. Right? There's no real measurement for the value of a dollar unless it's measured in gold. Right? Dollar is this much in gold today, and that's what you see in Canadian dollars. You see that our dollar is weak against the U.S. dollar. It's weak against the other fiat currencies. And it's weakening against gold. And this is another reason to have it, right?
And with the Trump administration, of course, wanting, as you mentioned earlier, a lower U.S. dollar, because, of course, you've got a race to the bottom. You've got the yuan being devalued. You've got the EU taking measures that will probably weaken the euro. And while the Americans don't want to be in a position of having their export markets damaged because the dollar is worth too much, so they're trying to weaken their currency. So you put it all together, everybody's trying to weaken their currency. Well, what's that against? So what's the other side of that? Well, the other side of that is that the gold and silver are going to go up. Do you see this rally continuing for and how high do you think it's headed? I mean, are you able to gauge at this point, Jeremy?
I would say I'm not too worried about how high. I'm looking more at the long term, and I know that the market is going to continue in this long-term trend, higher and higher for many years, simply because of just the things that you mentioned: dollar devaluations, currency wars. Supply and demand on the metal, and also currency wars add a whole new level of geopolitical risk to things as well, which is another reason to own it. So on this particular run, it's really hard to say. The action's been really good. I heard today a lot of the analysts are saying that this weakening in the stock market could continue for a few weeks. So if we're headed for a few weeks of this type of volatility in the markets, then we're going to continue to see these gains in the metals.
Wow, great. Okay, so if people want to find out more about Guildhall Wealth Management, where you're talking about the ownership of the solid gold material rather than paper gold, what's the best way for them to do that?
The best way is to just go to guildhallwealth.com. You'll see the various vehicles that we have for physical ownership, whether it's taking home delivery, using a storage vault depository, or even holding your own physical product in a registered account like an RSP or a TFSA. So just go to guildhallwealth.com.
I'll tell you. And get in now before, at this point, I'm not an advisor on what people should do with their money, but boy, if you wait too long, it's one of these days, so soon you could find yourself kind of paying a lot more for access to the actual physical metal than you can right now.
Yeah, there's nothing wrong with wading into the water and dipping a toe, learning about the market, getting a feel for how it works, getting a comfort level, and then moving on from there as you see opportunities in the market.
Thank you so much, Jeremy. Appreciate that.
My pleasure. Thank you so much, Mark.
Bye-bye now. Jeremy Wiseman of Guildhall Wealth Management. Check it out. And we'll be back with more news talk after.
You're listening to News Talk Sauga 960. Also streaming live on sauga960am.ca.